In this video, we're going to talk about the attributes of successful traders. Stay tuned. Hey traders, a very warm welcome to you. So this is the second part of a multi-part series of videos. In the previous video, very quickly, we talked about the habits of losing traders. They're taking small profits. They're cutting losses early. That classic behavior that comes with a losing trader. They don't have a definable strategy. They don't accept the risk. They're not fully committed to trading. They need to be right. They're not giving it the respect it deserves. Understanding the 50-50 ratio of winning to losing trades. Giving themselves a big pat on the back when really it's just down to luck. And expecting to compete against the best in the world and winning. And let's just look at this analogy. Now, I've used the analogy before because I've done a pilot's license course, but you could be, it could be anything, guys. It could be an athlete, it could be a surgeon, could be, even not quite as high as a surgeon, even a lower medical expert. Anything at all where there's a reasonable level of competence. Would you expect? Let's look at this pilot versus trade. Look at the process, and this is just it's just a private pilot, guys. It's not even like someone's done a commercial pilot's license. This is a private pilot's license. Very, very lowest rung possible. You get your license, you can go off and you can fly a certain small plane, and it takes you multiple weeks to get it unless you do an intensive course. Multiple things. Let's just look at the process of that, and let's just see why 95% of people fail at trading. This analogy is perfect. Okay, would you dream, if I handed you the keys and said, listen, would you dream of jumping into a plane, expecting to take it off, fly it, land it at another airport with no training? You wouldn't do it. Okay, you might be able to get away with it. You might get in there and you kind of, you got a little checklist. You might just about get away with it. You're going to be dangerous. You're going to be a hazard to everybody else. You're not going to be able to do anything the right way, and there'll be a lot of luck involved in you getting from A to B successfully if you've never been in a plane before, right? You can probably agree that. If you think of the steps, but then traders expects to do just that. Expects to literally pick up the platform and trade at a high level straight away without going through the process. A student pilot, this is the sort of things you learn. Obviously, your basic controls of flying the actual aircraft, how to, the radio skills when you're talking to different radio frequencies, and obviously you're up in the sky with commercial airlines as well, so you've got to be quick, you've got to be concise. All this kind of little sub skill set that comes in with a broad skill set. If we look at trading, we could use we can also say there's little sub skill sets that come in with the broad skill set. And weather, understanding the weather patterns so you can avoid the weather, understanding how to read the weather before you take off so you know if it's safe, with the limits of the plane, the visibility, all this kind of stuff. Again, another sub skill set. Navigation, emergency procedures, the takeoff itself, the landing itself, unusual circumstances, emergencies. That's just a few things, guys. And a student pilot, you practice each one of those until you're skilled and proficient and you move on. So a trader is exactly the same. We have little skill sets that we're good at. Okay, executing the trade, risk management, analyzing the market, analyzing the trades, holding the winners. All these kind of little things need to come together to have a successful flight, if you like. In other words, successful trading over a certain period of time. And the majority of traders expect literally to jump into a plane and fly it from A to B safely. In other words, jump in, trade, move from A to B, the end of the year, and make money. And this is kind of the theme that you see with traders is that they might just focus on one thing. Okay, just look for the next profitable trade. In other words, let's use the analogy again with flying. I'm just going to focus on my takeoff. That's not going to get you where you need to be. Yes, you need to do that, but it's just part of the puzzle. There are many other parts and pieces of the puzzle that need to be put together. So let's move on. Let's look at the habits and patterns of winning traders. Okay. The first thing is, I've put these into three kind of categories here. And there are multiple subcategories, but let's just keep it broad for now. Losing trades. They cut losers without question, right? If the trade is not working, if the thesis of the trade, okay, it's not to say as soon as it goes into loss they cut it. Let's not confuse this. A lot of people say they cut losers. It doesn't mean that if it goes into loss they cut it straight away. What it means is that when it goes into the portion of area of the market or the price moves to a level where the thesis of the trade is wrong, then they cut it without question. If they're buying a breakout and it comes back right into the range, whatever level they've set before they've taken the trade, they cut it. They don't hope that it's going to work. They already have a level where they say, you know what, this is the point where the thesis, the premise, the idea of the trade is wrong. It's gone. And they do it without question. They don't hope, they don't care, they just do it. They never go home with a loser, and this is for short-term traders, and it's very specific for kind of day traders. And what I mean by this is, I saw this pattern loads, with very active traders, is that they'd be day trading, and they'd be frustrated. They'd hold a trade, come to the close, it's a losing trade, and the guys who are doing it professionally just cut it, move on, next day, let's forget about it. But the losers would kind of hope, and they'd just change their strategy and say, well, I'll hold it overnight because it might be okay. And of course, it's just, again, it's like digging the big hole. The other one I've got here is cutting the trade if it's not acting right without hesitation. Let's just put this into perspective again. Not acting right. These are parameters that are laid out in the plan. In other words, if it's, perhaps they're buying a breakout example, pushing up, it just sits there for an hour from a day trading perspective. It sits there for multiple days from a swing trading perspective. They cut it, they get it out. If not acting right, there's a list of things which are under the not acting right heading. Just dump it, move on to the next thing. Not worried about being right, not worried about being wrong. Tolerance for loss is very low. Okay, they don't fear being wrong, but they fear serious damage. This is the difference. This is the key difference, guys. The fear of being wrong doesn't exist. Okay, it doesn't matter being wrong. What they fear is serious damage to their trading account that is going to take a lot of time to claw back from. So they don't let anything give them serious damage. They don't care about little losers. Obviously, they don't want multiple little losers, but they don't want to see a catastrophe, or catastrophic, should I say, loss that's going to damage the account. They just nip it in the bud, move on. Nip it in the bud, move on. All right, let's look at the winning trades aspect of it. They run their winners with incredible consistency. Okay, this is something that you see, and it's admirable to see some of the best guys in the world. And I know from my perspective, something really I had to work on. I'm still consistently working on it, keeping those winners, holding those winners, finding that sweet spot where you're running it. And they kind of in the trade, and they're not going to just cut it because it's a profit. They're going to say, listen, this is working for me. I don't need to cut it. All the parameters are still right. The thesis, the premise of the trade is all still accurate and correct. Let me run it. And it's not a one-off thing. They're not doing it occasionally. They're doing it consistently, time after time after time. If the trade's working, it's run, it's run, it's run. And the difference is, just to digress slightly, you look at the current statement of a losing trader, swing trader, and a winning trader, swing. I'll start putting them into categories here. A losing trader will have no trades on, or will have a couple of losing trades on. A winning trader, or a profitable trader, will have a couple of trades on that they've run for a long time. So how long have you had that for? I've had it for a couple of months. If we're talking of a short-term swing trading perspective, whatever it may be, and it's working for them, so they're holding it. You won't see that with losing traders, and it's something to bear in mind. Okay, another thing is, when they're in a winning trade, they're not going to start looking for a reason to exit. If anything, they look for a reason and a price level to add to the trade. Again, they're flipping this whole thing on its head. Losing traders are like, oh, it's not working for me, I'm going to have to cut it, I'm going to have to get out. What, it's not going to work. Oh, looking at news articles, looking at this, looking at oscillate, all these new indicators, a reason for them to take the money off the table. Other way around, the winning traders are saying, hey, listen, this thing's working for me. Where can I really dial the risk on this? Where can I add to my position? Where can I really, put the throttle to the floor here and press this one? Because I'm right. I know I'm right. I need to drill my kind of idea home and make as much as I can out of it. That's the distinct difference. All right, third category, guys, risk. They're taking low risks. Okay, there's a I can't remember who said this, but there's a really good quote, and I guess if you Google it, it'll come up. There's no reason to take substantial amounts of financial risk ever. I think it was Paul Tudor Jones, but you don't need to be making massive amounts of risk, taking a massive amounts of risk. You can trade with small risk, not getting this confused with tight stops. You still have to take risk, but they're saying, hey, listen, you don't have to, let's say, shorting Apple with size before earnings, or tech stock before earnings overnight. You don't need to take that kind of financial risk to make big profits. That's gambling. They take low risk. They understand the risk. They understand how much money they're going to potentially lose. Where's the risk coming from? And then take the trade. And it's the same kind of thing. They don't take risky positions relative to accounts. So they're not kind of pushing all of a sudden huge size relative to what they've been doing. They may increase the size that we talked about adding to the winners, but that's just dialing up the kind of exposure based on the profit they've already got. They're not going to start out with a massive size and say, hey, listen, this is 50% of my account. It just doesn't happen, because they understand the kind of consequence of randomness in trading. Very nicely moves on to the final point, is not letting one position damage them. You look at losing traders, there's that 1 or 2 losing trades that have just decimated the account, done brutal damage to it, and if you took those out, the account wouldn't be too bad. And that's what happens with successful traders. They just don't have those. They don't let one position damage them. Yes, they might have a couple that are are not doing as well as they should be, but then they've already understood their risk parameters. They're not holding it and hoping. They've already capped their risk. It's not going to do any more damage than that. Sure, there might be an unusual market event that catches them out from time to time, but it's not going to be. They're not going to be in heavy size with it. They're not going to have specifically gone into that seeking that kind of risk. They may be in a position that's gone their way. All of a sudden, some news has come out and has gapped it against them overnight, and they've lost a bit of money. Unforeseen risk. You can't eliminate that, but very unlikely it's going to damage them, because they will have known that, hey, there is a chance that this can come out of somewhere. So I'm not going to go in crazy with it unless I can feel that I have capped my risk, because they understand that some things can be career ending and they never want to get in that position. Okay guys, next video I'm going to talk a little bit more about trading habits and patterns of winning traders. Stay tuned, see you there.